Hey everybody, Kevin Mitchell here. And in this video today, I'm going to be talking about the 4 different ways that you can kill your mortgage approval. And the reason why I'm going to share this is because just because you get pre-approved for a mortgage doesn't mean that you're necessarily going to get the mortgage once you find your house. And the time between when you get pre-approved and the time you buy your house, you want to make sure that you don't mess things up. In the video, I'm also going to be talking about some strategies that you can implement to build your credit if you finding it tough to get approved for a mortgage that's the size that you need to buy your house with. So the 4 different things that you need to avoid. Number 1 is need to avoid buying it. It says buying a vehicle in the article, but you all really need to avoid taking on more debt. The mortgage companies approve you based on your DCR, which is a debt coverage ratio. And if you take on more debt, like a $25,000, $30,000 vehicle, it's gonna, change your debt coverage ratio and maybe make the numbers not work anymore. So the bank that just said yes a few weeks ago will then, when you go back to say, okay, I found a house, say, oh no, we approved you before you bought that $35,000 car. So if you're looking to buy a house, you want to check with your mortgage professional, your mortgage broker, to make sure that whatever you're going to be incurring in new debt doesn't put you past the point where you're not going to be able to get your mortgage. And obviously, a vehicle is a very obvious thing, but home equity line of credit, if you use some of that, that could cause, it to throw off your DCR. Credit cards, any form, quick loans, whatever, any form of debt that you incur will affect it. So remember that. That's a big one. Another thing you have to remember is don't be late on your bill payments. If you have Visa payments or if you already have a line of credit payment, make sure you're punctual, make sure you're early with them, because late payments affect your overall credit score, which again could affect your mortgage approval. Changing jobs, another one they talk about. If you're going to be buying a house soon, try to line it up where you do it before you change jobs or after you are through your probationary period. If for whatever reason you're on a probationary period at your new employment or even changing jobs, banks don't like that. That's a really big reason, again, for them to disapprove a mortgage approval that was already there. On the other side of the coin, if you are in a position where you need to build your credit fast or build your credit to be able to qualify for a mortgage, one of the biggest ways and one of the biggest tips that I suggest to people that I talk to is getting a credit card. And if you can't get a credit card, if you can't be approved for one, no worries. There's always the option, if you go into your bank, to talk and get basically a credit card where it's secured against the money you put down. So if you can't get a credit card, what they'll do is say, okay, we'll give you a $500 credit card, but you must give us $600. And that way, it's their security in case you, without any credit, if you don't end up paying, they're covered. But this is a great way to, again, start building that credit. You put the $600 down, you have your $500 credit card. Don't only get that credit card, guys, but every single week, put your groceries on it, or put your gas on it, or put both on it. Instead of using the cash in your pocket, put it on your credit card. And then every single week, pay off the entire balance of it. Your credit score absolutely loves it. That's going to help build things up. It's going to make you look better as a borrower. Other than that, make sure that if you're looking to build your credit, don't take on a ton of extra debt. But all in all, you want to make sure that any bill payments, anything that you have, do not be late with them. That really affects you negatively. So I hope this helps. If you, again, the 2 different spots, if you're in the mortgage approval state, don't mess it up. And if you're looking to build your credit so you can be approved for a bigger mortgage, get yourself a credit card, make payments on it, and show that history of making payments on debt. We'll talk soon.